Hello and welcome to another edition of the Moving Iron Podcast. This podcast is proudly provided by Axon, helping dealers move more iron for almost 100 years. Find out more at axontire.com. Axon was started almost 100 years ago out of a passion for keeping agriculture moving. It's that same passion that drives them today. With a vision for a better experience for both farmer and dealer, they set out to create a better way to move more iron. When you partner with Axon, you get immediate access to a full range of products and solutions designed to meet the complex needs of today's grower. Axon carries all major brands and sizes of tires, wheels, and tracks. From custom colors and sizes to fully customized wheels, you can have the solution for virtually any problem today's farmer is trying to solve. To find more or become an Axon dealer, please visit axontire.com.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron, time and time again. Through the years you'll find us here. Moving iron.
Hello and welcome to Moving Iron Podcast number 221. This edition of the Moving Iron Podcast is brought to you by TractorZoom, delivering insights. And I am lucky enough once a month to have Kyle McMahon from TractorZoom to come on and talk about what's going on in the marketplace. And TractorZoom is a great place that I like to go look and see what's going on and track data because, to be quite honest with you, it's the most comprehensive place out there that auction data is getting collected from, not just online auctions and those kind of things, but, you know, what do you got now? About 450 or so auction companies that are throwing you data?
We're about ready to hit 500.
All right, see, look at that. So 500 independent people that are all sending unique data points in. So that's what makes it such a valuable resource, is that it's not one place that's gathering that stuff. It's, you know, independent places. So Kyle, how you been, man?
Good, Casey. Thanks for having me on.
Yeah, no problem, man. So Kyle and I have had long conversations about a lot of different stuff. And I've talked quite a bit on this podcast in general about combines, and I'm a firm believer that this is the year that the used combine marketplace is going to explode. And a couple of reasons for that is, one, it's about like everything else. There's not going to be that many new combines that get sold. The number of new combines that generate trade-ins that actually make it back to a lot are going to be, I think, few and far between. And I also think that with some of this parts availability issues that we've been seeing, some guys are going to look at this used combine over here as a better option because, knock on wood, all the parts are there. Where you have these other combines that they're trading in, where they're struggling to get stuff going. I would love to know how many custom guys on the run have traded combines along the run because of parts availability. So I mean, of any color, you know. So I think it's going to be a big play. But again, because of the lack of used tractors, the lack of used sprayers, the lack of you name it, really, if you're a producer out there and you're coming into the end of the year for some tax reasons and you need to go out and spend a little money or something like that because you've made some money this year, I think your only choice is going to be combines. So, Kyle, my opening monologue there, anything there that you disagree with or you don't find to be true?
No, I think that's spot on. And I guess just to add some other data to that perspective, what we're seeing, what we've been seeing over the last few years is more and more farmers adding multiple combines to their fleet. Partially that's to farmers getting larger, of course, but what we're starting to see is that's growing much more aggressively, up to the tune of up 30% over the last 4 years of retirement auctions having more than one combine, which is a very interesting stat to us because that means more farmers are having more than one combine.
Right.
And does that mean that's because of parts availability? This is a totally different year than previous years. Or is that just for the optionality of being able to run two combines when it's fit to get with the fall?
Yeah. I think the two combine on the farm thing, I think I saw that spike up a little bit over the last couple of years just because how cheap combines had gotten. And the idea is like, well, I mean, for another $50,000 to $90,000, I can get this second combine, and it might not be the 780 that I've got, but it sure is a maybe an older 680, 2013 or 14 680, I'm gonna pick up for, pennies on the dollar type of thing. And now I got two machines out there running that are gonna do good things for me, and I can pick, whether I'm picking up acres or just getting done faster. One of the two things. I think some of that happened, and I think, like you said, to your point, like I tracked the data that I talk about here that we get off the internet, and of all the stuff out there, the volatility in combine numbers, just from month to month, how many combines were taken off the websites versus how many were added, and those kind of things. It's almost a one for one. 1 month they'll 300 will drop off, and then the next month 298 will come back on, and then this volatility that you see coming back on, it shows you that there are a lot of guys that have either a spare combine that they're trading in on something other than a combine, or they're just outright selling what they've got, and that might have been listed on a website. It's just coming off. So it's just a very different combine market right now than what we've seen in the past 5 years. I mean, it is definitely a machine now that guys are looking at updating, because let's face it, the overwhelming majority of the market out there right now, what's on farm is 5, maybe 3 years old. And they're looking at spending another $10 or $15 or $20,000 on something, and they're kind of in a point where they're like, it's time to upgrade. We're going to go figure out what that looks like.
For sure. And it's almost, people are definitely upgrading combines, but I think we talked about this in the past. One of the first pieces that a lot of farmers were updating was the tractor. Right. Now coming into combine season, and it's starting to get very interesting. Prices are obviously higher than they were last year. Mm-hmm. Commodity prices are much higher. And what we're starting to see, what's interesting is, even though there's the inventory coming, we're starting to see prices continue to creep up. There's some combines sold back in March before commodity prices had hit their high, and they were bringing massive premiums. And those premiums kind of been holding steady from that March time period, but there haven't been a lot of inventory sell. And naturally, that stress is on that low hour, late model, right? Right. That's where people want to start spending their dollars. And I think it goes back to your point of, people are getting a little bit nervous about the supply chain issue of parts and availability. And I think that goes across the whole board. There's no big pushes in semiconductor chips coming back to market. No. There's some big hedge funds and big non-agriculture analysts talking about how that shortage might not be coming back to normal levels until 22. That's really challenging. Automobiles take more semiconductor chips than tractors and combines, but still, those are things to start to keep your eye on, especially if you're looking at that. Mm-hmm. And I could see that also happening, continuing this year, people adding to their fleet because they have the cash flow and the ability to. And then next year, I don't know if we'll see the inventory come back online, but it's definitely starting to deplete inventory versus replace inventory. Yeah,
we've had several conversations like that just amongst ourselves. But I'm of the opinion that if 22 is similar to what we see happen in 21 as far as production schedules go, and whether it's cars or combines, right? If that happens again, you're really going to see a very starved marketplace. And some of these machines are going to come out, and just like these cars, you go to Kentucky Motor Speedway or wherever that's at, and Ford's got whatever 5,000 or 6,000 trucks sitting out there. They can't sell. And the same deal. I mean, we're going to start seeing equipment do the same thing, where we've got these machines that just everything, they all start up and run like they're supposed to, but they just don't auto track, or they just don't, you can't map with them, and those kind of things, all those agronomical things that folks are really starting to, they really lean on, and that's industry wide, man. That is every manufacturer's got the same problem. I think if you start running into this and you start seeing these same kind of pattern through 22, man, I think it's 23 or maybe even 24 to 25 before you really start seeing a normal marketplace again. So now we're looking at 4 years of just of if it's there, I got to buy it. If it's there, I got to buy it. If it's there, I got to buy it. If I'm in the marketplace to do something like that. That also does tell another thing too, that we've watched these auctions and we've seen what's happened with these auctions, but that late model, low hour stuff that we see come across the marketplace, that's going to start to be a relative term, right? I mean, the late model, low hour stuff of whatever it is that you have in your availability might not be the 250 separator hour combine anymore. It might be a 450 or 500 hour combine, because that's what's, after they get their new one, that's what's going to be available. Or it might not be the 500 hour tractor, it might be a 900 hour tractor. I mean, all those things are starting to kind of gin a little bit. And if that continues to happen, it'll be interesting to see how the market reacts to the quote unquote late model low hour and what that actually looks like.
I'm guessing the definition will change if that actually happens.
Yeah. So it's something to pay attention to. I think, again, that's when we talk about this, how important these auctions are, and how important that data is that comes out, that you guys put out, is there might not be a 200 hour or 300 hour, or some of these, some of those combines we saw sell last August that were, $280, $290, $300,000 combines. They were, what were they, 150 to 200 hour combines? Nothing like that on the marketplace. Well, we probably won't see that again, because there won't be something to replace that. Now that same feeding frenzy might be over that same model year combine, but it might, that shift has changed 200 or 300 hours. So it's going to be, you got to pay attention to it, man. There's just so many moving parts out there that you don't know. Right now, I'm talking to guys that they want to go out and sell their stuff, or they want to go do these kind of things, and I'm like, what's it worth? I was like, man, I don't know. I mean, if you, what it's worth today and what it's worth in December are going to be two different numbers, and it just depends on who's got what, where, and what happens with the marketplace. And I think you and I both know that there's not going to be a lot of inventory out there in December for people to go pick through.
Yeah. What you're just talking about, I find pretty interesting, because a lot of times a real estate appraiser, or any appraiser, likes to use multiple comparable sales, right, yep, to actually come up with an average and value your item. When I talk to appraisers right now, and about any market, whether it be farmland, farm machinery, the most recent sale is going to be the most applicable to what your asset should be worth. Mm-hmm. And in today's market, if you're looking at any data older than December 15th, yeah, it's pretty bad. Yeah. And I don't care what market you're in, you should not be looking at that information. The information you should be looking at in the last 2 months, even if there's that one sale and you're trying to price your piece of equipment, that's going to be the biggest leading indicator of value than anything older than that. Right. Because commodity prices and estimated cash flow for 21 are dramatically different than they were back then.
Yep. So you have some combine data. Talk about that data you got and what you see happening out there from the stuff you're getting from your auction houses.
Yeah, for sure. So we're really only pulling Q2 2021 data, as we were talking about. The relativity of this information has to be recent. Yeah. You can't be using anything old. So as we start to look at the marketplace and combines specifically, of all the combines that have sold so far in Q2, we've seen a premium paid on the, what I want to call gently used, which is older than late model.
I'm going to steal that, gently used. That's nice.
So when we specifically broke down a couple of combines. If we look at the older class, 3,000 step hours, pretty old, there's still a premium being paid year over year, about 10%, 8 to 10% on average. Commodity prices are obviously higher. And that was really interesting for us to see, because there's a premium being paid for those 3,000 step hour combines, but it's nowhere near the premium of 30% year over year growth of that 2017, 2018 model year, about 1,000 step hour combines. And so there's still a premium for that older equipment, but once you get in that 1,000 step hour, it's up 30% year over year. Pretty astounding number. What's really interesting is once you drop down into that 500 to 600 step hour price range, we're seeing that 15 to 17 price increase year over year, which was not as high as what we actually thought. would happen, and that's if we're starting to look at John Deere, that's that S780 combine class. And what we really attribute that to is because there's such little inventory last year selling,
Right.
that's still what the hotcakes run. Everybody still wanted that really low hour late model piece. But what we're seeing is that price stability is always being high. There's not much volatility there. And I think once we get into this August timeframe, barring any economic big shifts, we'll continue to see those climb. Where we're starting to see maybe the other classes or the 1,000 to 3,000 SEPR kind of start to flatline in Q2. There's not a whole lot of growth continuing.
Right.
Maybe that's the volatility of the commodity prices over the last 30, 60 days. And some of these big auctions that we've seen, the AHW sale, Pfeiffer's had a sale. There's a couple of them that we're expecting big numbers, and then all of a sudden you'd see soybeans down 60 cents right before the auction starts.
Right.
And that's just,
Right.
it just doesn't feel that great.
Yeah. Yep. No, I think the one thing I've noticed about these auctions is that kind of to that point of one, auction values are up, like you said. I totally agree with that. I've been watching machines sell over here that are selling for higher prices than what we have on our lot, full advertised retail prices, right?
Wow.
So that's tells you right there the shortage of equipment, what that looks like, you know. And then kind of to your point about the 1,000-hour combine, you know, I track that data month over month and what that looks like, and you know, the biggest volatility in actual numbers of machines coming in and out of inventory off of websites is that 1,000-hour machine, that 1,000 to 1,500-hour machine. And I mean, it is not only is it volatile, but it is like polar opposite. I mean, one month it'll be just a rocket ship as high as you can go, and then it's the same rocket ship back down the other way, and it's just this huge swing going on. So that tells you that's what people either, one of two things that are happening. One is they are absolutely trading that machine in, and two is they're absolutely, the 2,500-hour guy is now thinking like, okay, you know what, I'm going to take my 2,500-hour combine, and I'm going to come by, I'm going to go down 1,000 hours, because that's 3 years worth of use for a guy like me, type of thing. You're starting to see that happen. So there is, I just think that this is the year that used combine inventories, and we started out this year with everyone was fearful about how many used combines they've got, and now the combine conversation has shifted. Like, I don't know if I'm even going to have a loaner combine to have during harvest. So now it's just things like that are going to be, that are out there that are just really starting to kind of come full circle, I guess.
And what you're hinting at is, I don't know what the psychology is sometimes with farmers, or the thought process into the decision of what they're going to buy. Maybe they're used to going up to 2,500 SEP hours and then saying, you know what, I need to get rid of it before I have too much repair or reconditioning costs, and I'm going to go get that 1,000 SEP hour combine. But really, if they kept their options open and looked at the optionality, that same trend, those prices are a lot higher. So if they actually open up their mind a little bit more, they can start to see other options in the marketplace, barring what they really want to go buy, that you may be able to step up to that 780 versus staying that 680 class. It's obviously a price step up, but there's other benefits too. My point is, as you're mentioning, that 1,000 SEP hour can be pretty volatile, and we're seeing a lot of demand for that right now.
Yeah, it's scary how much demand you're seeing.
15% higher year over year than that 780 class.
Yep. So one thing that I think a couple podcasts ago, when Aaron and I were talking about the data that we pulled, and we were talking about these combines, we were really taking a look at the kind of what we were kind of making our prediction of what we thought the trend line was going to be. And my thought was, even the 2,500-hour combine, the 2,000-hour combine, still a lot of volatility in there. As many were coming up as were coming on as they were coming off, type of thing. And it was just this flow of equipment, which tells me that a lot of this stuff is getting traded off on non-combine for combine like deals. Guys buying a tractor or a sprayer or selling it outright or whatever he's doing. But for the most part, there's just this flow of combines right now, and you can see it. And I said something to the fact of, I don't remember exactly what I said, but it was, you'll know when the combine market is been exhausted because the 2012, 2013, 2014 model combine that we've talked about so much on this podcast is now gone from 50, 60 to 70 or 80,000 bucks. That now you're looking at that same 2015 that was, $80,000, $90,000. Now it's $100,000 to $110,000 auction combine, and that 2012 is, that $70,000 or $80,000 combine. That's when you're going to start knowing that the combine market has really gotten saturated or not saturated, but absolutely exhausted, because to go from holy crap, we're never going to get rid of these combines and it's the worst thing ever, we've got to figure out some anchor program for the Navy to get rid of all these combines. So now we're going to transition over to this. I don't know how many we're going to have available to sell coming through this and keep our guys going. So it's a big swing in the overall marketplace, and it will definitely be, again, I've said it a million times, auctions are absolutely the canary in the coal mine. And if anybody tries to tell you any different than that, tell them they're wrong, because more trend lines come out of the auction marketplace that affect the retail marketplace than the retail marketplace affects the auction marketplace. So just keep that in mind as you're doing this. And TractorZoom is a great place to go find that.
There's hundreds of people watching an auction, and there's 2 people watching a deal happen when it's peer-to-peer.
Exactly.
Person to dealer.
Yeah. And that's the thing about an auction versus a retail transaction, is that auction is truly cash on the barrelhead, what that is worth that day, right? I can ask, whatever for a combine or a tractor or whatever forever, and somebody sooner or later will come buy it, right? That has nothing to do with that day type of thing. The trend lines that you see develop in auctions are truly indicators of what's happening in the retail marketplace, where that demand is at, and what the willingness for that demand is. And if you're seeing low auction numbers, you're going to see low retail values. You can't compete with each other. And it's one of those things. They're not separate from each other. Some people want to think they're so separate from each other, but they're not. They're tied to the hip, and one just hates the other one. That's all the problem. That's what the deal is.
So I've got a question for you. If we're seeing this big demand for combines and prices continue to go up for most segments, if as you mentioned earlier, there's some of these that are selling higher than what you have them advertised for, the list price. Mm-hmm. Are you seeing people come and rush after they've seen that combine sell at auction for, let's just call it 5% over what you have it listed for, and there being a demand, I want to buy that now, because they're starting to see the market continue to inflate? Is there a rush back to the inventory at the dealership?
No, I haven't really seen that. I'm starting to see more combines move now than the previous 2 months. Starting to see that, but it also is that time of the year too. So there is, I would say if I saw a bunch of combines moving in April, then yeah, I would tend to agree with you on that point. But what I'm seeing now is seasonal buying is just more active, and I don't know, the conversations are, man, combine, my combine's worth a bunch. Yes, it is, and so is the one you're buying. So it's just you're not, it's a yin versus a yang thing. It's where's that equilibrium come in, and you're absolutely selling your combine at the height of the marketplace right now, but you're also buying at the height of the marketplace too, and that's where that dichotomy comes into play, as to what's the right thing to do. And if this thing fell off tomorrow, what's it look like? And I think a lot of guys too are looking at this like, man, we went from whatever it was, $3.50 corn in December to now we're almost banging $7 again over a 6-month period. This feels like it might be a bubble, and there's some of that going around, but I just don't. I read a deal the other day in Brazil. They were talking down in the Parna region of Brazil. They were talking about frost and snow before they got to it. So it's just nothing's really shaping up that's going to stop the bull market from running. It's going to be a big thing that has to happen and kind of go from there. But I think the longer that this kind of continues on and this shortage of equipment continues on, it just machinery is going to get more and more expensive, especially on the used side, just as supply and demand. It's simply supply and demand.
Yeah, I mean, it has to. If people want to continue pushing new product to market, prices are going to continue to increase. I'm sure you're seeing that at the dealership.
Yeah.
Prices are increasing more this year than they have historically.
Yep.
I'll let you speak to those numbers if you want to, but that's also causing an inflation into the used market.
Yeah.
And as we continue over the next year, that stress on the used market is going to continue to get higher if we cannot fill the demand. There's still much higher profitability in agriculture than there has in the last 6 years, and that's going to continue to demand better machines, right? Mm-hmm. No matter what time period we're going to be in over the next year, that's going to continue. So that the used market is something that we obviously track every day and watch every day. And I think there's going to be some really interesting trends continue to develop over Q2 and Q3 of 2021. And we're really going to start to watch those, especially in the combine market. If we start to look at upcoming auctions, July is pretty tight. There's not a lot going on. We have 58 auctions on the book so far. We anticipate that to be a little over 100, which year over year is down. Once we get into that August timeframe, we're starting to hear a lot of auctioneers talking about some great sales that they have coming up, whether they be more dealer reduction sales, whether they be some retirement sales that were booked all the way back in 2020 before this commodity swing went up. There's going to be some good inventory coming, but we're still predicting a lower inventory number than what we did in 2020. So supply and demand is going to naturally tell you those prices are going to continue to remain high.
Yeah. Of the conversations that you're having with these auction companies that you guys work with, are there a lot more? Are they seeing a lot more retirement type sales pop up, estate type sales pop up than they've seen in the past?
No, those are down significantly.
Okay.
There's
Shocker,
plenty of farmers out there that are 70 years old saying, "I'm going to ride this thing one more time."
One more time,
right?
Yeah. Mm-hmm.
And why wouldn't you?
Exactly.
You came off, if you're a farmer contemplating retirement in 2014, you hit it big. 13, 14, hit it big, and then the next couple of years, you're saying, everybody's optimistic. Maybe we'll do it one more time. Then we saw 17 and 18 and 19 and 20. We saw just a bunch of retirements, and those have almost evaporated. So the estate sales continue to happen. Those will always happen. It's just the nature of life. And but what we know we'll continue to see is consignment sales. The question we have in our mind for a lot of the upcoming consignment sales in August and September are the quality.
Right.
Goes back to what we were talking earlier.
Mm-hmm.
If there's logistical issues in the supply chain, do people want to continue selling their assets, or do they just want to continue buying and not even trade, not sell, and just hold on to it because of part shortage?
Yeah. That is the $64,000 question for sure. When is the right time? Even if you want to, is it the right time? There's so many moving parts that go in there. So it's definitely something to pay attention to. Kyle, good stuff as usual. Talk about TractorZoom, what you guys are doing there. What's some of the new stuff you're rolling out? Kind of what are you looking at here as midsummer here starts to roll down? Yeah,
we have. We're focused a lot on watching the auction marketplace continue providing great auction information as quickly as we can back to the people who are using our auction results and pricing software, which is called Iron Comps. And it's really continue working with those customers to build better product. And you'll see some exciting things come out here in the third quarter. And we're starting to get pushed in some interesting directions that I don't want to get into just yet. You'll probably be able to talk about that on the next podcast. Mm-hmm. But I think there's going to continue to be new ways of how people want to find equipment and shop for equipment.
Yep.
That COVID has really forced. It's interesting, even when we look at our own business analytics and how farmers are continually looking for equipment. It's very digital. COVID brought a massive digital shift, is what I like to call it. Adoption in agriculture of software is 5 years of software adoption or technology adoption was forced into 1 year.
Right.
Especially in the auction market. You look at every auction going online, every auctioneer having to adopt online bidding, and that is just habit now.
Yep.
We're starting to, we talk to a lot of dealers as well and start to hear a lot of buying sight unseen, and literally coming to pick it up or buying it contingent. So really watching those overall market trends and really adapting them into our own business. So continue providing a lot of the auction information and continue going down the path of listening to what the market has to say, and you'll see some of those exciting things come out in Q3.
Yep. Yeah, looking forward to those things and how they work out, man. So, well, Kyle, folks want to reach out to you and just pick your brain about what's going on, or just see what's happening with tractors, and what's the best place to do that?
Yeah, if you want to find what all the upcoming auctions, simply go to tractorzoom.com. There's a lot of inventory out there right now, smaller than what it was in the previous years. But if you want to find all the tractors, combines, planters, sprayers, tillage equipment, whatever you need, just go to tractorzoom.com and look at the upcoming auction inventory. You can hit me up on LinkedIn. Simply email us at info@tractorzoom.com. I'll get that email if anybody has any questions. Additionally, we're going to some great events here in the next few months. We're doing a equipment values webinar with Farm Equipment in late July. Not quite scheduled yet, but watch for that to come out. We'll be at the Dealer Mind Summit in August. The Farm Credit Risk 360 conference out in California, the 1st of September. And then, of course, we're coming to your Moving Iron Summit.
Right on. Yeah, that's you've been there once before. It came last year, or not last year, I guess 2019, when we could still meet in person. And
yeah,
there's some good stuff there. I'm looking forward to that. So, Kyle, thanks for being on the podcast, man.
Thank you, Casey. Great being on.
Thanks, buddy. Well, I'm Casey Seymour with Moving Iron Podcast. Make sure you check me out on Facebook, Twitter, and Instagram. That's where you're going to find the latest editions of the Moving Iron Podcast as they get posted, as well as any blogs I've got out there to post as well. I've got a couple that I need to get out. I just haven't got around to it yet, but look for those coming here over the next part of this weekend. Hopefully I'll have them all put out there. Also go to MovingIronLLC.com. That's where you're going to find the entire library of the Moving Iron Podcast. You can go all the way back to podcast number 1, where I had Ben Barrett and Machinery Pete on there, and you can go check that out and have a good time there. Also go to MovingIronLLC.com, and you'll see the information that you need for all of the Moving Iron Summit. That's September 15th to the 17th in Nashville, Tennessee. There's a great place to look at all the agendas and stuff like that. So take a look at that. Get registered for that. I believe the room block fills up here mid-August, and that will be full up there. So make sure you check that out if you're interested in doing that. If you want more information about that, you can send me an email at MovingIronPodcast at MovingIronPodcast.com, and I will be sure to get back to you. So with that, I am Casey Seymour with Kyle McMahon. Let's go with some iron, folks. Out. You want to have a meaningful competitive advantage to help sell more equipment. Whether you represent the sales, parts, or management department of an implement dealership, there's a surprising amount of complexity when it comes to tire, wheel, and track technology. Let Axon worry about that so you can get back to supporting your customers. Axon has leveraged years of experience to create a streamlined process that gives you a proven path to help today's grower and sell more equipment. The roots of their organization go back almost 100 years to the invention of the rubber tractor tire. Supporting agriculture is the number one driver of Axon, from product development through sales and service. To find more or become an Axon dealer, head over to axontire.com. You want to
Moving iron in the 21st century. Hardworking people